How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report that was submitted on September 25th, 2018 and released this past Friday. Here was the institutional positions being held at that date. And so let's go take a look now at gold. So you'll remember that last weekend we had a report that came out, but we had to take the data with a grain of salt because contracts were expiring. And many times what happens during contracts expirations is that the institutions will close out a bunch of their positions and not open up the equivalent amount of positions on the new contract. And sometimes what they'll do is they'll use the contract expiration as a method of reestablishing themselves with a position. So it's always very difficult to determine what's taking place when we see the data being released and we see a big change in the size of the positions. So we always have to wait for the following week's data to be released for us to have a better idea of what was taking place. So this week's report consists of that data of the following week. So we're going to take a look and see if indeed the institutions made some drastic changes to their positions or if everything is status quo. So let's take a look here. Gold. Now we see a slight increase over previous week's data. Actually, the last couple weeks have been an increase, and that's been as price has just simply been consolidating here. Longs are average size, okay? They're, well, about average. And shorts are above average. Shorts are aggressive, longs are not. Bottom line is coloration of the cells, sentiment is bearish. But again, we are expecting some kind of a move to the upside simply because of where we are sitting at. Very aggressively short. Profit taking has to take place. So expecting a move to the upside. Now let's take a look at oil. Oil broke to the upside after consolidating here. Now we're heading towards that weekly area of supply that I had mentioned when price was down here, that this would be the perfect spot to see a shift to the downside. So now we are approaching that. And as price is moving up, we got an increase in longs, decrease in shorts. Perfect, perfect, perfect. This is what we wanted to see. Now, price is going to be hitting this weekly area of supply, and we got the long exposure sitting at 88%, pretty high up there. Eventually they're going to have to take some profits, and I think this may be the key spot where we're going to see the big move down begin from. Right now, very bullish. Doesn't mean we buy because it's way too high up on the charts now. So going to be watching this one to see that shift from being very aggressive to profit taking, and then slowly after profit taking, an accumulation of shorts. We'll be keeping my eye on the data for that. Now we take a look at the dollar. And what we can see is during the past week there was a decrease in longs, but previous to that positions were 44,000. They increased it by 3. Now they've dropped it by 4. So pretty much not doing much except for moving price by the increase of positions and decreasing of positions. What we can also see is in shorts they have decreased from 10 to 9 to now 6.4 thousand positions short. With this move, we now see a big increase in long exposure from 83% to 87%. So the sentiment is very bullish at this point. Aggressive with long positions, but there's still room for positions to be added to. Right? We saw this be taken out, the demand zone that did not reach a 2-to-1 move, and it created a weekly area of supply here that is valid. 2-to-1 move down, and now we are retracing back up. So the idea is we should see some downward momentum build. Now, is that going to take place with some profit taking on longs, or is it going to take place with shorts being added? Well, we don't know. But again, with this chart in consolidation, anything can really happen. So looking at the data is what we need to focus on to find some clues as to where the institutions are going to move price. If we are to just look at the data and determine what is happening now, they are bullish. So we're thinking a move like this. But when you compare it to what we're seeing on the other charts, they tell a different story. And it's those charts that we should focus more attention on, because it is those charts and the data relating to those charts are what takes precedence, simply because if you take a look here, they're slightly aggressive with their longs. But when we take a look at the euro US dollar and their positions, you're going to see that they are a lot more long than what we are situated here on the US dollar. And so because of such a large position that they have on the euro, they're going to need to focus their attention on that, because they are so overly exposed on that currency. So when we get there, I'll explain this a little bit more in detail. But taking a look here, we would think price is going to go up. Okay, so now let's move on. Aussie, we see that right before the contracts were expiring, they increased longs from 31 to 48,000. Okay, right at contract expiration, they reduced it down to 26 and now down to 21. So longs being heavily reduced. During this time, shorts have been increasing to aggressive levels. Aggressive, but still room to add. 81% exposure to the short side, and net positions increasing to the negative side. And this comes as price is now testing a weekly area of supply. Supply forces down could mean that price is going to reverse and start heading downwards. Very possible, considering where we are reacting to right now. So keeping an eye on this. Sentiment is bearish, but we're at extremes at 81%. So it's tough to want to get into a short trade right now, especially after all of this. So I'm just watching the Aussie for now. US CAD. Now, a decrease in longs from 56,000 to 51, and an increase in shorts from 25 to 31 as price was dropping deeper into that already tested weekly area of demand. It's been tested so much that it becomes weaker and weaker with each test, so it is expected to eventually break. If it does not, then that means the institutions will likely take price up like this. But during this whole phase here of sideways action that starts back in early June, what do we see? June, 51,000, 51,000s. Longs are not shifting. 35,000, 31,000. Slight reduction in shorts. So you can see during this whole phase, nothing has really changed except for longs increased and then decreased. So the profit taking. Okay, longs increased, profit taking, and now we're here. And we don't see an accumulation of any position. We see a little bit of an increase and then decrease. A little bit of an increase and then decrease. So nothing really happening at this point, just moving price. If you take a look at the sentiment is neutral. And that's a good thing, because with all these tests of this weekly area demand, buying here would be very dangerous. So I'm going to wait for signs that they are once again accumulating that long position, because I believe eventually we're going to see this. So looking for signs of that on the charts. Sentiment neutral, that means sit on the sidelines and wait for something stronger to appear. US Swiss franc, what we can see in the last couple of weeks was this. Last week, a big decrease from 43,000 to 28,000. So at that point we were thinking, well, is this having to do with the contracts being expired? Or are they using contract expiration as a means to resituate themselves with this currency pair? And that's exactly what they did. So they closed off a big portion of their longs from 43 to 28, and this past week they reduced by another 2. Shorts were increasing, and that's what caused a drop into this weekly area of demand. Now, if you remember from previous videos, this is the area that I've been expecting price to reverse from. And take a look at that. Beautiful. So what we're seeing here is exactly what I believed was going to play out. We have a reduction of long exposure, dropping from 85 to 72%. So we're slightly in a bullish neutral territory right now, or a neutral bullish territory, I should say. A little bit of a reduction in net positions, but I think what is about to start happening is they are going to reaccumulate a strong long position back up to these highs. We're half of that right now. So reaccumulate a long position. There is an institutional trade signal that has presented itself right in this area. I'm going to be posting it out into the portfolio for all the members, and you'll be able to see exactly where I plan to get into this position. So stay tuned for that. It'll be coming very soon. Let's take a look at the euro. Now, you remember what I was talking about on the US dollar, that if we just judged the US dollar's data on what we saw, we'd have an inclination to want to expect it to go higher. But then we take a look at the euro, and we can see that long positions are super aggressive as well as shorts, but they have more longs than they have shorts, and we are expecting price to eventually drop. But with more long positions than shorts, it tends to make more sense that they'd want to close those longs at higher prices. And I suspect that's just what may start to take place. With weekly area of supply taken out, they increased longs. That's what caused price to rally upwards. They also increased shorts. So right now it's very difficult to tell exactly what's going to happen because the chart is in consolidation. But what we can see is that their aggressive situation with longs leads us to believe that they would want to close things a little bit higher than where price is. But again, anything can really happen. Right now sentiment is neutral, which is good because you shouldn't really be trading the euro right now. It can really do anything. Now the portfolio is in some theme trades, so we are positioning ourselves according to what the institutions are doing, and we are going to take advantage of any move either higher or lower. Whatever way price decides to move, we are going to profit from those moves. So I'm waiting for price to get a little bit higher. Once it does, I'll be opening up institutional trade signals to take advantage of the move to the downside. So we'll wait and see how this plays out. There's no exact direction that we can plan right now because anything can really happen. If price decides to go lower, we have demand here, and it can reverse back to the upside. But at the end of the day, we're going to learn a big lesson on how the institutions handle such a large position in longs when the expected move is to the downside. So we'll be watching and learning on that one. Pound US dollar, they use contract expiration to cut their long positions in half, which is quite significant. So what happens when you cut positions in half, long positions? Well, price drives higher. And that's exactly what we saw on the charts, taking out this area here. So price drives higher and then starts to pull back. Making sense, right? If you take a look here, that drive upwards was only because of longs being closed out, not because of shorts being increased. In fact, shorts are being decreased from high aggressive amounts to 101. Quite a significant drop if you take a look here. Profit taking. And we were expecting profit taking because of the overall aggressive stance that they had with all their positions. So profit taking did indeed happen, and it was on shorts, and that's exactly what I said we should be expecting. It's profit taking on those shorts that they've been holding and adding all the way on the way down like that. So right now 75% of their overall exposure is geared to the short side, but I have an inclination that that is going to change over the next few weeks. So I'll be watching for that. I'm in some themed trades again, taking advantage of what I'm seeing with the institutions here. They want to take profits on shorts. They might drive price even lower. Who knows, but either way, whether price goes up or down, I will be profiting on the trades that I have opened. So let's take a look at the US dollar Japanese yen now, and we'll see that they increased longs as price was consolidating right before a bigger move to the upside. So this institutional trade signal worked out perfectly In fact, there was another institutional trade signal on the way up, and that worked out perfectly. And now I am waiting for some very key things to take place, and then there will be another valid institutional trade signal, which I will be posting in the portfolio for the members to take a look at. And then I'll be placing orders on that institutional trade signal to eventually profit from a bigger move to the upside, which is what I'm expecting. So sentiment is bullish, with a move from 70% to 74%, and net positions increase from positive 63,000 to positive 84,000. Right now, with this big increase in longs, it puts total positions in an aggressive state. So we might start seeing some profit taking on longs, a pullback, and then aggressively adding to their long positions again. We'll see, but I am waiting for that signal to present itself, and then I'll be jumping on the bandwagon alongside with the institutions. Kiwi. We see that contract expirations were used to reduce their long exposure from 19,000 to 11,000. Big decrease in longs. Big decrease. While shorts remain aggressive. So this leads us to believe a bigger move to the downside is what is expected, which is what we have been expecting for the longest time. And so we are looking to take advantage of this Kiwi weakness, and we already have started to do so with one of the Kiwi pairs. And so far, everything is looking perfect for a weak Kiwi. Net positions increasing on the negative side. Shorts are aggressive. Room to add. And sentiment is bearish. So looking good so far. Until things shift, we are still going to stay bearish with the Kiwi. Alright, ladies and gents. There you have it. There's your September 25th, 2018 CFTC report. I hope it was useful for you and your trading. And until next time, have yourself a good